What's the purpose of that meeting?
Well, it's interesting because we don't know what they discussed, although the president took to social media, right, to talk about the growth in Nvidia shares and the $4 trillion milestone. What was interesting is earlier this week, Jensen Huang went on MSNBC, and in the course of that interview, he made the argument that the American technology stack, in which Nvidia currently holds a monopoly in the market for AI chips, is akin to the US dollar, right? The US dollar is the world's reserve currency. And the message that he was kind of putting out was, we want our technology to be the world's technology reserve, and therefore China needs to have access to it. And he's kind of been consistent on that, John. It's not a matter of tariffs or penalties. It's an issue of export control. And he has basically consistently said 50% of the research and researchers focused on AI are from or in China. And it's better they have our tech than their own tech if we want to stay in control of this field.
Ed, any sign whatsoever that argument is actually resonating with this White House?
So there's reports that Nvidia has decided to proceed with a specific designed for China chip that may come in September. The situation was that they required a license for their existing China chip. They decided not to pursue that license. And what Jensen Huang told me, if you remember, is you can't engineer any more performance out of these things unless you start from the ground up. Nvidia has not officially confirmed that. Jensen Huang regularly goes to China. They have many employees in China, but it is notable, our reporting, that he's going to meet with the Commerce Ministry. And, one would imagine, and based on a lot of the conversations I've had with big investors as well, that Jensen is very fixed on this idea that they're an American company that conforms with American laws. I'd suggest that in that conversation with the president, he would say that, but also knows he has to go to China and get something out of it, reassure customers that basically have had their access to that technology cut off.
I had my doubts about Nvidia a few months back. This was due to the fact that expectations were set for perfection in a setting that was far from it, not because there was any question about its technological leadership. My main worries were about persistently high PEG valuations despite forward PE contraction, revenue risks related to trade with China, Huawei's competitive comeback, new threats from hyperscalers' custom chips, more effective threats like DeepSeek, and a slowdown in the AI craze. I did not rate Nvidia as a buy, but I was still holding on to it. Since the recovery was more pronounced than the decline, a purchase of Nvidia at that time would have likewise yielded a 44% return. In retrospect, my hold position seems gloomy because so much has happened since then. Nvidia delivered revenue beats and normalized EPS for another solid quarter. Revenues from data centers have increased once more. The guidance has exceeded expectations. Despite ongoing efforts to develop specialized chips, the CUDA moat showed no signs of difficulty. Some of the issues are still present, though. Actually, since I adopted my hold position, some worries have grown more serious. I was and still am a long-term Nvidia investor, but I admit that my fear of heights makes it extremely difficult for me to make new investments. In the meantime, I have been offering alternative ways to play Nvidia as a bull while easing the pressure on valuations and risk profile. The China risk is still present, with export controls remaining uncertain until the tariff war cools down despite modified chip lines and competition from Chinese homegrown custom chips. In order to get at a structured, risk-aware position within the AI semis landscape, my thesis will also suggest a similar balanced play in Nvidia, along with my less positive stance on AMD. Even if Nvidia continues to hold on to cutting-edge training use cases, I think that other manufacturers may gain traction as the AI industry shifts towards wider deployment. Given Nvidia's worries about geopolitical risks, regulatory overhang, and even saturation threats, AMD in particular is a comparatively structurally de-risked and underpriced option. AMD's MI300X is establishing itself in Oracle, Microsoft, and Meta data centers and supercluster AIs. The MI300X's place in the AI ecosystem is growing because to its enhanced native memory capacity and extensive hardware and software integrations across AI workloads. There has been a push globally for a broader GPU supply mix where sovereignty, supply dependency risks, and cost control are important considerations and peak performance is negotiable. In India's AI mission, a mix of AMD and Nvidia models is in play, with an emphasis on cost effectiveness. AMD and Fujitsu are even working together in Japan to develop AI HPC systems. The expansion of OEM and cloud support has been in the works for some time, but markets have not yet priced AMD for those tailwinds. Although Japan still relies heavily on Nvidia, efforts are being made to develop AI infrastructure domestically whenever feasible. Whenever feasible, cost and procurement flexibility will be prevalent themes, which gives AMD access to numerous middle-tier and inference training workloads. The forward EV to EBITDA ratios indicate that AMD and Nvidia are not that different from one another. AMD has been trading at higher values from the beginning of the last leg of the bull run, even before the latest second source thesis was actually starting to show actual shipments. Actually, AMD's valuations have only recently matured in tandem with its expanding reach and adjusted to more palatable territory. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. While AMD's valuations are becoming more mature but still loaded with expectations, the markets are pricing in continued growth in inference use cases and sovereign demand, which could mean more execution and numbers-backed price action than valuation re-rating going forward. In contrast, Nvidia remains stable and is still not trading at all-time high valuations, despite its all-time high price actions. It is evident from the valuations that Nvidia's is more performance-backed by consistent earnings and revenue beats, and its AI build-out is far more tangible and mature. According to a report published by The Information on Friday, China's Huawei Technologies is working on a new AI chip design that would increase the processor's capacity to handle a wider range of AI development tasks. The design is said to be more similar to the architecture used by both Nvidia and Advanced Micro devices, which should facilitate the transition of Chinese AI developers from Nvidia's chips to Huawei's alternatives. Huawei wants to increase the attractiveness of its chips to Chinese tech companies, which currently favor Nvidia's processors despite growing challenges in obtaining them because of U.S. export controls. The planned new chip design will allow AI developers using Huawei's processors to run code written for Nvidia's software platform, but Huawei will still need to develop software that converts commands from Nvidia's software into instructions its own chips can understand. While Chinese tech companies have tested Huawei chips, few have fully adopted them, largely due to the difficulties developers have adjusting to Huawei's unique software system after years of building products using Nvidia's CUDA software. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Yesterday, we know that Jensen Huang has been visiting the White House. A lot going on here and exciting for folks who hold this.
It definitely has been exciting, especially when you consider the fact that now Nvidia is worth basically the entire size of the Germany economy, or like the entire sector, consumer staples or materials or utilities. I mean, some of these facts are staggering. It's larger than the bottom 220 S&P 500 stocks market caps combined. So it has been a really historic week. It's been a blast to talk about as we've looked at a company that moved from $3 trillion to $4 trillion just in a matter of weeks. So that in itself has been astounding. But looking to open a bit more mixed today after we saw, again, shares close at $4 trillion for the first time yesterday. And a visit to China by CEO Jensen Huang could be seen as perhaps the next leg of enthusiasm. Nvidia, though, right now, first we saw that we need the permission to sell AI chips to China again. Huang did meet with U.S. President Donald Trump on Thursday, as you mentioned, before traveling to the People's Republic, according to various reports. But Huang has since said the Trump administration's restrictions on chip exports to China will cost his company roughly $15 billion in sales, and did claim that limits are counterproductive as they do encourage, actually, growth of the domestic Chinese AI industry. So in addition to making the case to sell hardware to China, it is likely that Huang and Trump have discussed the potential imposition of these wide-ranging tariffs and how that's going to impact the chip sector. So far, I think all of the fears we've seen were a bit overblown in regards to some of the specific tariff impacts, because we saw this mass pressure weigh on the broader semiconductors, but it was never expected to see the direct impact from some of the global trade turbulence. The exports are a whole different story, but I think that was interesting the way we saw that trade down on that concern. But a lot of these names, as Nvidia have brushed off that pessimism quite nicely. And while chips have been exempt from these levies until now, the U.S. president did say he would soon be announcing tariffs on those imported semiconductors, though he didn't specify a level or date. So that does still remain a bit of an overhang. But I mean, you look at Nvidia and you'd say, what overhang? Because it's been the unstoppable force. As we saw the initial unraveling early this year, it's now rallied 90% off of those lows at around 86.62 a share. All-time high, 164.50 a share, and we're now up about 20% on the year, Nicole.
And so, it's interesting. So it's been exciting for Nvidia, and there's still plenty of folks who think it has more room to the upside. They did get, what's interesting, Jensen Huang, right, has this China issue, and then Huawei was making a lot of chips, filling all the holes, and that wasn't good for Nvidia. But then they got a lot of Saudi Arabia contracts, I was hearing, because of President Trump. So it certainly seems like there's a lot of bright spots, coupled with AMD, which has made an incredible comeback off the lows. I saw 3 months, it's up 85, 3 months up 85%. Who wouldn't take that? The group, I guess, still has a lot of hot news.
I know, and I think the comeback of AMD has been important too, I think, to speak to the appetite of AI, because AMD has not been at highs since early 2024. And it has been, it was one of the early really cycle winners of all things AI. It was initially seen as the number 2 to Nvidia, and now finally starting to see actually this momentum hold. It's the first time in a long time that we've been able to say consistently we've been in a really nice uptrend in AMD. I mean, Micron as well, different space, but also following in the same world. And I think all encouraging that the definite appetite to clearly invest or trade in these names is fully back. I mean, helping boost all of this, Taiwan Semiconductor, which is the largest foundry business, also its largest customer being Nvidia, did just report sales growth for the quarter, preliminary, but also still about 40% from last year. So yeah, you're still seeing gains that match, I think, also a lot of this enthusiasm and honestly lofty valuations in all of these names.